Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Wednesday midweek, markets are holding out quite smartly. In fact, we've seen a new all-time high on Sensex, Nifty, Bank Nifty, and some of the other sectorial indices, including your large, mid and small cap. Before I go any further, let me give you certain levels. Sensex is about 190 points, 77,495 is the level on Sensex. I would repeat once again, up 190 points Sensex, 77,495 is the level on Sensex. Nifty up about 20 odd points, 23,580 is the level on Nifty. Bank Nifty, and now new all-time high over here, 700 points uptick, 51,140 is the level on Bank Nifty. Rupee dollar and crude oil. Rupee with a strength of 0.05 paise, and the level is 83.36 rupees to a dollar. On the Brent, a little bit of uptick, small reason of concern but nothing alarming. Brent is trading at about $85.33 to a barrel, and NYMEX is trading at about $81.53 to a barrel. I will start with the crude oil basket first. So because of the news flows that we had from the Middle East, we've seen this uptick. And like in the very recent past, whenever the negative news flows come from the Middle East, crude oil is something that starts boiling on the higher side, and then it kind of cools off once the situation starts de-escalating, or the news flows start coming in supportive for lower crude oil prices. So this give and take relation between the Middle East and crude oil prices will definitely be there for a prolonged period of time, unless and until we have a decisive resolution with respect to the situation in Palestine, Israel, Iran, Hamas, etc., etc. So one needs to be prepared for this uptick. On the rupee dollar equation, I think after seeing levels of 83.50 and beyond, we have cooled off decisively, and I think this cool off can lead to a more stronger rupee against the dollar, and we could see levels of 83.15, 83.20, and of course a little bit more positive on the rupee against the dollar. So that's the level that we can watch out for on the rupee dollar and crude oil. Now coming to the market, friends, I think a decisive up move from 4th of June onwards to this 19th of June, and virtually a new all-time high on Sensex, Nifty, Bank Nifty, mid cap, small cap, and some of the sectorial indices. This momentum is likely to continue, honestly speaking, but not before we see a little bit of consolidation, profit booking. This could be in form of intraday. This could be in form of a spillover in terms of 1 or 2 days of correction. But the undertone for the market, according to us, is extremely strong, and possibly we are preparing ourselves to a much more higher level from here on. Just to give you certain levels on the Nifty lower side and higher side. On the lower side, we can expect 23,400 to 23,500, and on the higher side, 23,700 to 24,000. So this is a broad range, and the reason for this broad range, friend, is purely because of the levels that we are at and the momentum that we've seen over the last maybe about 10 to 15 odd days since the time we saw the election outcome on 4th of June. Remember, friends, on 4th of June, by and large, each and every public sector company, irrespective of what sector it belonged to, was down and out, and it was beaten black and blue purely because of the negativity in terms of sentimental impact because of the election outcome. And from 5th of June onwards till this 19th of June, we've seen a fantastic recovery on almost all public sector companies, irrespective of which sector it belongs to. So this momentum will continue, be it defense, be it power generation, be it railway related stocks, be it infra related stocks. This momentum is going to continue, and more importantly, I think power, defense and railway, these three sectors and companies associated with these three sectors, whether it is government or private, will continue to be in the spotlight with respect to order wins and in terms of earnings because of the order execution that they will do at ground level. So our sense is that these will continue. Other than this, of course, banking, autos, cement is something that will be in the spotlight, along with some hospitality and aviation stocks is what we can watch out for. But any lower level, especially in terms of some intraday correction that we saw, we've seen buying coming in. So every dip will be bought into is what our sense is, and we can possibly head towards 23,700 and 24,000 on the higher side, and mind you, the lower level being 23,300 to 23,400. On the events which are lined up, well, by default, from possibly end of first week, beginning of second week July 2024, we'll have the first earnings curtain raiser for this new financial year, and along with that, later on, we will have the budget. Now, there are a lot of unsolicited advisors which are quite visible on various social medias, and most of them are of the opinion that it will be a populist budget, government will go all out and spend money, won't keep in mind the fiscal disciplines, etc., etc. Friends, of what we know of this NDA government led by Bharatiya Janata Party is that whichever situation they have held their wisdom above par, they will not go into a populist budget just because they got 240 seats and that they want to garner more. I think disciplined approach is something that this government is known for, and I don't think any kind of leverage in terms of populist budget is what will be considered by the Honorable Finance Minister Srimati Nirmala Sitharamanji. And it will be a budget which will be growth oriented, it will be a budget which will take care of employment, and it will be a budget which will possibly set the ball rolling for a newer level with respect to GDP and corporate earnings. So this is what our view is, and I hope that this view rolls out well as and when the budget unfolds in front of us. With respect to first quarter earning this financial year, I think it will be a shade better given the kind of opportunities, barring one or two companies in an odd sector wherein there might be a disappointment. I don't think there is going to be a big concern. And some of the sectors that will be in the spotlight for good reasons on the earnings front is going to be banking, autos, cement, cap goods engineering, defense, etc., power generation, and of course Indian railway related stocks, infra related stocks. That's going to be the broad basket for earnings related outlook and where to look out for earnings growth and opportunities in terms of long term investment. Global news flow will be something that will possibly set the direction also, not quite decisively, but more in terms of a passing news flow which may impact the market depending upon which way the news flow is. But overall, our sense is that despite of the FI selling, we are where we are at a new all-time high. And I think, as and when the FIs comes, they are welcome. If they don't come, they're, at least I don't hold any kind of disappointment, because our own strength and capabilities are far justified with the very recent history in terms of FI selling and the levels where we are at. So not too much of a concern from my side, but extremely optimistic about retail participation, domestic institutionals liquidity strength, and in terms of corporate growth story with respect to first quarter and a growth oriented budget. So that's going to be the setup for the next maybe about 1 month from now. We are on 19th of June, possibly by this time next month, July, we should be facing a budget also, and we will set the tone therefore. And of course, during in between this, I think the progress of monsoon is something that we'll be discussing. However, the beginning of monsoon, there has been a little bit of deficit. South has seen inline or a little bit better than expected. South India has seen better than expected monsoon, but East, West, East and North India, there has been a slight deficit, but according to the Met Department, nothing alarming, and hope that catch up will happen very soon. Thank you very much for your patience hearing, and before I take your leave, there are two investment ideas that I would like to highlight. First one is a small finance bank company called AU Small Finance. In fact, we've discussed this stock before. The reason for it being repeated again is the target price being revised upwards. 800 plus is the target on AU Small Finance Bank, and the good part about small finance and microfinance companies is that being the ticket size being small, run rate of repayment of principal and interest is almost 90% plus, and thereby the concerns on asset quality is virtually zero. So first one is AU Small Finance Bank with targets of 800 plus, and the second one is from the PSU pack, Engineers India Limited. On Engineers India Limited, well, it's a government-owned company primarily into cap goods engineering, complex turnkey projects, and to set up a very strong infrastructure for production of green hydrogen. This is one theme that will augur extremely well for Engineers India Limited. Targets could be in excess of 300 plus, subject to, of course, earnings being delivered and the order book getting executed at ground level. So that's the caveat for Engineers India Limited. These are the two targets. I'll again repeat: AU Small Finance Bank with targets of 800 plus, and Engineers India Limited with a optimistic earnings visibility target of 300 plus. Thank you very much for your patience hearing, and I'll again see you next week. Till then, please do take care of your health. Bye bye.